what is going on in one of the most expensive markets in North America. So, Emma.
We're seeing a pretty steep downward slope in regards to months of inventory. You know, we've hit like 2 months of inventory in the condo market for the first time in a long time, probably close to 6 months. And we're under 2 months of inventory for the freehold market. So normally when we see that trend happening, it does usually indicate that we're heading into an environment where we will see prices increase. Let's look at the year over year and the month over month data. So on the right-hand side here, what you'll see are
everyone, Sandro Canada, your host for the Canada Real Estate Investing channel, directly from the Ottawa Valley, beautiful countryside. And I have the honor to host today the one and only Emma Pachi from Toronto.
I love it. You got the last name right there too. So now everyone knows my secret now on the channel.
This is amazing. And as I mentioned a little bit offline, I've been investing in multifamilies, in luxury rooming, and land development across Canada, US, and Brazil. And it's amazing to have an opportunity to chat with Emma that will give us a great insight of what is going on in one of the most expensive markets in North America. So, Emma,
awesome.
The mic is yours.
Thank you for the wonderful and exciting intro. It's probably the most excitement I've had on the intro on this channel, and I've been, I think, 2 years on the channel, so thank you. It's awesome. Yeah, I guess for anybody that is new to the channel, my name's Emma. I run a real estate team in Toronto called Monstera, and essentially what we do is we help millennials purchase their first home and build a strategy to be able to transition from their first home into their forever home. And so, as you said, obviously Toronto is not the most affordable Canadian city. And our plan is to be able to help millennials actually realize the goal of home ownership, because I think it seems like such a far-fetched thing for them to do at this point in time, when really it's not. It's totally feasible. It's just a different strategy than our parents had to take to accomplish it. And so I guess with that said, before we hop into the presentation, if anybody's watching the channel and they are renting right now, looking for a couple of strategies to transition out of renting and into home ownership, I actually put together a guide, which is 5 different strategies to be able to use to transition from renting to owning. And so what you can do is take each of these individually, or what I like to call strategy stacking, and that's taking maybe 2 or 3 of the different strategies in the guide and pairing them together to help accomplish the goal of home ownership. And so if you're interested in that, it's completely free. There's going to be a link in the description below the video there. Just download it, go through it. I'm open to feedback, so if there's anything that you guys think I can improve on, please let me know as well. But I hope you find some value in it. So let's hop into the video. And then for those of you guys that have watched this many, many, many times, because it's been about 2 years, I usually hop right in here, Sandro, and talk about the data itself. But I wanted just to kind of lay the groundwork or the foundation to let everybody know like what I'm kind of feeling in the marketplace, because I'm going to show you some numbers this month, which were actually a little bit lower than what I would have expected, given the experiences that my team and myself have had over the last month. But I actually think probably in more of a positive direction. And so there's 3 kind of key components that I feel are driving kind of the market sentiment right now, okay? And so before we even get into the data, if you're not a data person, just take this for what it is. So in most of the segments of the GTA, we have a significantly lower inventory than what we were expecting that we would have at this point in time. And so we're heading into the spring market, and typically, you know, after Easter, we start to see kind of inventory, and the numbers we're looking at this month are for March, but you normally start to see a bit of an uptick in inventory in March, and then we start to see quite a bit of inventory come online after Easter, and we're still trending at relatively low levels, which we will look at in a second. So when we pair that with buyers being much hungrier, because we've obviously seen Bank of Canada hold rates for a little while now, with the expectation that we're likely going to continue to hold and then see rates start to drop off, probably Q4 or early 2024. What that has done is it has changed, I guess, the buyer comfort level and mentality in the marketplace. And so when we constantly have this looming fear of increased rates, that makes people go like, whoa, I want to have some certainty. Like, we're human beings and we understand human psychology. We don't like when things are uncertain, and we don't like change. And so we constantly had information coming out about proposed change, and that caused people to really put a pause on making any moves. Now, we haven't necessarily seen rates come down, but what we've seen is that people have said, okay, well, we understand there's probably not going to be much change anymore, and therefore I'm kind of willing to come out slowly and start looking at real estate again, because I feel a little bit more comfortable with the fact that maybe prices have bottomed out, or at least prices will remain stable. And so we'll look at pricing in a second. But low inventory paired with hungrier buyers that are coming out to look in the marketplace is typically a great recipe for prices to increase, because they don't have a whole heck of a lot to choose from. Okay. So what we saw before, I guess, we'll look at like a year ago. So February 2022, COVID to February 2022, we didn't have a lot of inventory, and we had a lot of really aggressive buyers out there. Okay. So if I just gave you the first 2 points here for market sentiment, you'd be like, oh my gosh, well, I think the market is going to go crazy. We don't have a lot of inventory and buyers are coming out of the woodwork. The one thing that I have noticed in this market that I actually think is slightly different than other markets is that buyers are staying slightly more poised than what I've seen them be in the past. And I think that is a result of the fact that rates are still relatively high. But what I'm noticing now is buyers aren't necessarily getting caught in that emotional trap that they often will when they're going into offers and they're like, I just need to have this house. They're making more logical decisions around, okay, like I've offered this price, and this truly is my cap. I think it's fair. It's a little bit more than what the last guy paid for, because I understand the market's going up, but I'm not going crazy anymore. And so I think if you look at what's happening in the marketplace, and then we look at the numbers together in a second, these three things make sense. And this is kind of what I'm feeling in the marketplace right now without even looking at the data. And so what does this actually mean, though? And this means that if you actually rewind probably to November or December's market update that I did on here, I think one of the forecasts or projections that I had about the market shift is now I'm finally starting to see those things come to fruition. And that is, buyers start to lose leverage, and the leverage that they've really lost in the marketplace so far is like the first shoe to drop is always going to be conditions, right? So instead of just being like, I'm going to overpay on price, it's like, okay, well, you don't get 5-day home inspection conditions or 5-day financing conditions anymore. At the beginning of the year, they went from like 5 to 7 to 3. And now they've went from 3 to like, I'll take off the conditions, but I'm still only willing to pay this price. And right. So we're starting to slowly see buyers lose their leverage, but it's not like they've lost everything where we're in like this extreme seller's market. Some of the regions of the GTA are, but not all of them. And so we're seeing a bit of a disparity or a bit of a power shift back from, buyers. You probably know this, Sandro, too, because you're an investor, but like, October, November, December, you were probably the only buyer showing up to the door because everybody else is super scared, right? So buyers had a lot of leverage at Q3, Q4 of 2022. They were probably, sellers couldn't even get a showing at the door, let alone an offer. So if you were a buyer in Q3 or Q4 2022, you were like, whatever conditions you wanted, probably get a pretty decent price on the property, probably the only person to show the property in the last 4 or 5 days. And now we've started to see the pendulum swing back into the favor of the sellers. However, I do want to just set the tone for anybody that is watching this video that's thinking about buying. there's going to be like a crazy amount of news and a crazy amount of media. But I do want you to know that like the competition that you have out there, there are going to be people who are emotional and overpay and do that stuff. But I'm seeing that actually less frequently in today's market. So, but you know, there's not a lot of inventory. You do have competition, but people are staying a little bit more poised in today's market.
And one, it's interesting that you mentioned this, because we see the media, and I mean, we are not here to talk politics, but it almost feels like a very specific agenda to create this whole fear.
Yeah.
Right. But then when you look to the real numbers and the real data, it's like, well, but we have an increase in immigrants coming to the country as a target from the government, because they keep the economy going. Where are these people they're going to live? And people that move to different markets as well, and people coming up from the US. So the demand is not slowing down by any means.
Yeah, so I think you make a really good point, and one of the things that we've been doing a lot of research on, we're actually going to have another video come out on the channel, I assume sometime in April, just about like how permanent residents can buy their first property. But one of the good points that you've made is we do have a lot of immigration. I don't want to go too far down the immigration rabbit hole because I'll have a ton of other information coming out in the next couple months on that. But we do have a certain portion of the population that do have their PR status, which means that they're eligible to buy a property. Now, we also have another very large portion of immigration that's occurring that are non-permanent residents, non-citizens. And right now we do have a ban for any non-residents, non-citizens in terms of purchasing. However, they do all need a place to live, which is typically going to be a rental. And so I'm curious, we'll talk about rental prices in a bit. I'm curious to see how things pan out on the rental price side of things. But I think in terms of, you know, your point regarding the media, we can be frustrated with it, and it obviously drives sentiment and stuff, but like it is what it is. They're technically marketing companies, and the sexiest headlines get the most clicks, and the most clicks gets, they get paid by, you know, oftentimes the ads that they place. And so they kind of need to get clicks so that they can generate revenue through like advertising. And so we can be as mad as we want, but like, are we going to fight an uphill battle or swim upstream when it's like, that's what their intention is because that's how their business works? No. But I also think it's important that you watch alternative, alternative opinions. And again, you can take my opinion for what it is, or you can like it or dislike it. It doesn't matter to me, but I do think it's important that you do additional research outside of just a headline era that we live in, where nobody even wants to read the article. People just want to read the first line, and the first line is always going to be the catchiest, most controversial thing, because that's what it's going to take to like get a rise out of people, right?
I agree.
Yeah, and so for me, or for my opinion, for anybody that's watching the video, it's like, yeah, I'm sorry to break it to you, I'm just giving you the honest goods. Buyers, you had a lot more leverage 6 months ago. You don't have as much now, but I don't see it being as crazy as what it was 12 months ago or February 2022. So I don't think that it has to be this super hot, this super cold, this very polarizing thing with real estate. It was like you had a little bit more leverage, you lost some leverage, but there's still good deals and there's still reasonable sellers out there. And so I still think it's a more realistic and reasonable market for buyers than what it was COVID to peak of the market in Feb 2022. But it's not as great of a market for you if you're a buyer than what it was October 2023. October 2022. So,
absolutely. And one thing that I noticed as well as I do my research is that, yes, we saw a significant increase in price during COVID years, but yet, even though the price they came down slightly, they're still higher than the pre-COVID.
Yes.
Right? So if you take COVID out of the equation, the prices are still very healthy compared to historical data.
Totally. And I mean, look, I would love to say that we all drive our decisions by logic, but I think it's been studied enough to realize that most humans actually make their decisions off emotions. And like the last thing that someone wants to see or feel is, I paid X number of dollars at the peak of the market, and now my house is worth 25% less, and that I'm underwater or owe the bank. Like that's like the worst feeling, and I really do have empathy for anybody that's in that situation. But if you are in that situation, you're watching the video, like just please don't sell. Do whatever you can to keep the house. And I feel that we're on the uptick with market activity. And so we'll look at the numbers now, and you can kind of derive your own opinion, and I'll give you mine, and do as much research as you can to make the most informed decision for yourself as you possibly can. So let's look at the year over year and the month over month data. So on the right hand side here, what you'll see are February to March trends. So what basically happened from February to March. And so what you'll notice, and these are the numbers that I'm showing you on this particular slide, are just for Toronto itself. We're going to look at the suburban markets in the GTA in a second. But if you look at condo prices last month were $728, and they're $732 this month. So we really haven't seen much of a change. We're at like 0.5% change. And you'll notice by my type A color coding there, I tried to say if it's within 1% on either side, it's pretty neutral. If we're outside of 1% on either side, then I'll give it a color. But prices really haven't changed from February to March when it comes to condo prices. Condo townhouses, we went from 827 to 841. Now you're like, oh my gosh, the market's coming back. We went up 1.5%, but we were also looking last year at 959. If you just look at the bottom here, these are the year over year prices, which we'll discuss in a second. So yes, prices are on the upward trend, but are you still able to get a good deal? Yeah, in comparison to where they were, you still have the opportunity to get a good deal. Semis basically went from 1.28 million to 1.62 million. So again, we're not seeing a ton of movement there. We're still within a 2% variance on either side. And then detached properties in Toronto stayed relatively flat, which is 1.712 to 1.708. So it's not even a 10 grand difference there.
Wow.
Yeah, so we stayed relatively flat month over month. Now, the suburban markets are going to be a different story, and we'll talk about why in a second. But if you look at kind of year over year, so we're talking March 2023, this is when we started to see, you can even see by the graph, Feb for the most part was the peak, and then you notice March we're still not that far from the peak, but we're down about 11% for detached houses, 18 for semis, 12 for condo townhouses, 12 for condo apartments.
And this is considering just the 1 year.
That was 1 year exactly. So March 2023 to March prices, March 2022 to March prices in 2023. And then I'm going to show you the peak. So what happened in February, because that truly was the peak. I'll show you where we're at off the peak in a second. So general, rule of thumb for Toronto, it's pretty flat. There's not a whole heck of a lot of excitement going on. And I actually, again, to my earlier point, I thought these numbers were going to be a lot higher. It almost felt like, because my team's been all over the GTA in the last 2 months. We've been sold a couple in Durham region. We're Oakville, Mississauga. We've been downtown. We basically have been all over the GTA. And we're going to look at, we'll look at this now, which are the suburban markets. And I was getting more of the, market sentiment that we might be up 3 to 4% across the board. Now, what you'll notice is the biggest mover for the suburban markets last month was Durham. Durham saw the biggest drop from the peak of the market, which we'll talk peak to current numbers in a second. But I think where I'm really noticing the biggest movement in terms of price or just general activity is the first time buyer entry level or cheapest properties, which is, you'll know as an investor, that's always going to be the most competitive segment of the market, because if you're the cheapest property, you have two segments of the buyer pool. First time buyers and investors are always looking for the cheapest thing. Right. And so that is typically with real estate where you're going to see the first portion or segment of the market bounce back the quickest. And I think that's why we saw Durham, the average purchase price was $888 in Durham, and we've gone up to $926. We actually haven't seen the number 9 in Durham in, I want to say, maybe 4 months or so. And in my experience over the last 2 months with representing buyers out there, it is where we have seen by far the most competition.
Wow.
Yeah. So 1 month we had a 4% jump, and that was kind of the gut feeling I had before the numbers came out for just the GTA in general, but that didn't happen to be the case. Peel, we saw average price point went from $1.32 million to basically $1.50 million. Halton went from 1.22 to 1.267. Toronto actually went down a little bit, so we were at $1.71 to $1.50, and then York region went from 1.302 to 1.344. And so definitely a little bit more movement in terms of upward pricing in the suburban markets in comparison to Toronto, which is interesting.
Now, what piques my attention is that, again, and I like to analyze the data, taking out of the equation the hype.
Mm-hmm.
And even if you take these numbers and I compare with the numbers before the peak,
yeah,
they're still trending upwards.
Yeah. Yeah. So let's look at that now, because I actually have that that's the next slide. So I'm glad that you mentioned it, because it makes an easy segue for me. And so if we look at where we were February 2022 to now, we saw Durham was at 1.3 or 1.23 was the average price. Now we're at 926. So we're down about 25% from the peak. Okay. Peel was about 1.3. We're at about $1.50. So we're about 20% down from the peak, 19.95. Halton was at 1.5. We're at 1.2. So we're at, 17%. Toronto was at 1.2. We're at $1.50. And then York was at 1.569 to 1.344. Now, what stood out to me in looking at this was for the last couple of months, most of these were all trending above 20% pullback from the peak. Like we had seen that kind of all over southwestern Ontario. It was like, hey, from February last year to where we are now, expect that your house has gone down 20 to 25%, right? And so we only actually have one of the suburban markets, which was Durham, that got hit the hardest, is actually over a 20% reduction from the peak, meaning that we're definitely starting to close that gap, because we've seen these numbers over 20 for several months now.
Absolutely. And then when you look into the numbers and you look what is happening in Durham,
Mm-hmm.
that gave that trend.
Mm-hmm. Again, I think the primary driver was because it had such a big pullback. You have to think about let's just say buyer affordability, right? Because that's like everyone's like affordable housing. Okay, well, realistically, if you're going to be in the GTA, it's not really that affordable. Like, I'm sorry. I know I represent buyers and sellers in Toronto. There's no real like affordable housing. But if we're thinking about what is the most affordable housing in Toronto, you have two options. You start with a condo and you're in the core and you want that like lifestyle and you want to stay downtown, or you're someone who's like, I'll give you an example. One of the clients that we worked with in Durham these last couple months, they sold their condo downtown. They bought their first condo, and this goes back to the strategy I was talking to you about us implementing with our clients. They didn't have a lot of money when they actually moved here overseas. They got their permanent resident status. They called us and they were like, we have 50 grand. We need to make the best decision with this 50 grand so that we can kind of like continue to build our equity, and we need to be able to trade up to be able to get a house. So they bought, I think it was October 2020 when they bought this condo. Okay, so they hadn't even been in the market for that long. Bought the condo October 2020. We sold it for them in February. And what they wanted to do was move from that 1-bedroom plus den condo, because their family is now coming from overseas. And they were like, okay, we need to get a freehold. We need a detached, ideally detached. We'd take a semi, but ideally everybody wants detached. So we want a detached 3-bedroom, 2-bathroom house, but we don't have that much more money, right? And so what do? They went to the most entry-level price point freehold market. And at this point in time, when you look at this, what is it? It's Durham. Yes. And so when you start to see people want to make those lifestyle moves, all the people that bought in 2016 to 2019 that were first-time buyers now got married, have kids, they need more space. They got a dog during COVID. They don't want to give the dog up. They need a backyard, all those things, right? And so if you don't have the 20%, because if you're going to buy in any other market here, you got to have 20% to buy a freehold property, because now you're over $1 million. But they didn't have 20%. They went from 5% down to, we were like with the equity, I think they ended up getting to like close to 15, but they couldn't go over $1 million because they didn't have 20%. So what did we do? We ended up going to an area where they could get everything that they needed with their family. And we ended up going out to Durham region because it was the most affordable place where they could still buy without 20% down. And right. And so therefore they have a ton of competition because guess what? They're not the only people in Toronto that have that strategy. A lot of people want to do the same thing. Right. So in terms of where we're at for suburban markets, I'm curious to see if Durham continues to close that gap, or, you know, I hate to say lead the race, but just for lack of a better term, kind of lead the race in terms of the rebound there. And then if we look at Toronto peak to current prices, we're looking at condos pulled back 10% from the peak. So it's like that's actually not a whole heck of a lot. We're at 822. We're at 732 now. Condo towns were, again, 976 in February, and they're at 841 now. Semis were about 1.5, and they're at 1.265, so they pulled back about 15%. And then detached, we peaked out at over 2 million, and now we're at about 1.7. So, you know, you can, again, when emotions drive decision making, you can feel like, I missed the mark, and I'm doing so poorly, and I should have bought in October, I should have bought in November, and, like, you know, I completely missed it. Well, as far as the numbers show, I don't think you missed it at all. You might have missed the bottom, but you're definitely nowhere close to the top.
Wow. And again, I love what you said in the beginning of our conversation, that even though we try to be logical when you make decisions, but you are human beings, and the emotions, they get on the way. And what I see happening now is a lot of individuals with money, because they either sold their properties, and I talked to investors, it's like, yeah, I sold and I cashed out and I'm sitting on cash waiting for that opportunity. So guys, the opportunity is gone. Like, act now, because you're not going to see that peak again, that you're going to triple your money in a matter of months or double, whatever it is, right? So jump now. And we see that scarcity and that fear. Again, as I mentioned, you look into the immigration trends and look into how the economy is also trending, and the internal immigration as well, and people that are already here. So there's a lot of great things that, of course, the media is not pointing out, but that are happening in the background. So people that are actually educating themselves, they can make informed decision. And that's when we are so blessed to have Emma to give out information.
Thank you.
We can move towards these decisions.
Thank you. Yeah, no, I appreciate that. But yeah, no, I agree with you. And it's funny because as someone who I consider myself as I do this all the time. So I consider myself a logical person. I invest in real estate, but I've even thought about this like over and over and over again. And I'm like, I think it's pretty much nearly impossible to only make a logical decision, because even when you think about investors, if we think about like who's purchasing real estate that should be making only logical decisions, like it should be investors, right? Because it should be based off the number. There should be no emotion, blah, blah, blah. But then when you actually peel back the layers of the onion for investors, you're like, well, like, but why are you investing? And then it always comes back to the emotional thing of like, I want to get rid of my job because I hate working 9 to 5, or I want to have a tremendous amount of generational wealth for like my family in the future. So you're making a logical decision at the time, but the decision is rooted in the base of emotion, or the base of like making your life better. And so I think it's like, you hear that all the time, like, well, I'm a logical person and I want to do this. And it's like, I think it's like physically impossible for you to be able to only base your decisions solely on logic, because there's always an underlying motivator that is based on like bettering your life to a certain extent. You know what I mean?
I couldn't agree more.
Yeah.
And we have this whole supply demand and the fear of missing out.
Yeah.
And then the list goes on. So I agree with you.
A very real thing. So ultimately what this boils down to, before I get into some more like nitty gritty details on the data, is I was expecting, truthfully, and I'll just admit that I was like wrong on how I was feeling last month, when I thought about like the average GTA home price, because we have been all over the GTA. I was thinking like, you know, I was actually thinking we'd probably be closer to like 3 to 4% for average home price increase. And I'm like, we're kind of getting back into that like unsustainable, like unfair growth again. But then when this number came out, we actually only saw an average of 1.2% increase on the average home price from February to March of 2023, which to me, when I saw it, I was like, my ego took a hit. I was like, oh, I was wrong. You know, I was like, I was wrong. But then when I looked at it, I'm like, I'm happier to see this, because this is a much more sustainable, reasonable amount of just general growth across the marketplace. And so I think when I was kind of deriving my thoughts and the points that I wanted to set out at the beginning of it, I really do think that that third element of buyers being a little bit more poised in their decision making is the thing that led us to this 1.2 instead of that 3 to 4. Because I really do think if buyers just let themselves go again and get very emotional and cannot rein it in, we could be in that kind of slippery slope of seeing prices increase. But for now, I think what's going on is pretty good. So let's just try and keep it.
Yes. And it's funny because, I was talking to my law. So I'm from Brazil, which is a very high interest rate kind of environment. And here I am and complaining because in 10 months we saw 8 times increase. And then my in-laws, they came to me and they, born and raised here. It's like, well, Sandro, like in the 80s, we were paying 17% and we thought that was a great rate. It's like, whoa.
Yeah.
Right.
For sure.
So a completely different scenario. You're not gonna, it's very unlikely that you're gonna see something like that, but we got pretty good compared to what's happening in other markets there.
Yeah, totally. It's kind of like the blessing and the curse. Like, nobody likes to pay more interest. It's the last thing I like. I don't want to pay more interest to the bank than I need to, for sure. But right now, where rates are, it is forcing people to make deeper, more logical decisions because money isn't as cheap, where they're like, oh, screw it, who cares? It's only 2%. Yeah, my payment's going to go up, but I get the bulk of the money back. And they start to make these justifications of like why it makes sense. And so when we look at it like from that regard, again, there's no part of me that wants to pay more interest, but it is forcing buyers to be more poised and to be able to really think like, am I willing to pay another $400 a month, knowing that the bulk of that is going to the bank right now? And then they're like, they're just thinking a little bit more, taking a little bit more time to think of it. And I think that that's why we're probably seeing this. Again, I could be wrong. Please disagree with me in the comments. If you do, I'm happy to hear everybody's opinion. But for the most part, I think we finally got rid of that like scary free fall of the marketplace where we're like, when is this pain going to stop? I think that's behind us. And I think in terms of what we've seen for just the general marketplace across Treb, a little bit more of like healthier numbers in terms of growth, because 4 to 5% or 7% some months, it's just not sustainable.
Yes.
Right. So if we look at important metrics, though, we want to look at a couple of things to see where we're headed, because now it's like, okay, well, we look behind us. We understand what's happening right now. Let's look ahead of us. And so if we look at months of inventory, this is taking into consideration condos and the freehold market in Toronto. What we've noticed is we're seeing a pretty steep downward slope in regards to months of inventory. And so this is usually a leading indicator as to where prices go. So if you see these sloping down, usually prices go up, because this means that there's less inventory sitting on the market. And so what you'll notice is if this number is above 4, we're usually in what is considered a balanced market. And for Toronto, that usually means seller's market, because we haven't seen that in a long time, right? And so we had a lot of inventory pile up at the end of the year there. And what you'll notice is we were like very close to 4 for the condo market for a long time. This is when buyers had a lot of leverage. So ultimately what this means is if there was no new inventory to hit the market based on like the absorption rate, so how many properties are selling, how long would it take for all of the existing inventory to be removed from the marketplace? It would take 3.6 months. Right? And so if you see this lower, it would only take 2 months. So that means the absorption rate is essentially twice as fast. So buyers are coming out and purchasing the properties essentially twice as fast, and or listings are not coming out. One of those two variables. And so what we've seen is, at the beginning of the year, we usually do see a pretty decent uptick in terms of months of inventory, but now we're starting to really see that slope, and we're holding, we've hit like 2 months of inventory in the condo market for the first time in a long time, probably close to 6 months. And we're under 2 months of inventory for the freehold market. So normally when we see that trend happening, it does usually indicate that we're heading into an environment where we will see prices increase. Okay. And then the second thing that we have to take into consideration. So like I said, there's 2 things. There's buyer activity. So how quickly the buyers are purchasing up the properties is one of the components. And then the second component is, well, how many listings are coming out, right? Because if we're not replenishing that inventory, there's no way that this number can continue to go up because we are assuming the inventory. And so what you'll notice is if we're taking into consideration Toronto like freehold listings, we have significantly fewer this spring market than we are used to seeing in other years. Like we actually don't have that much more inventory in the second week of April than we had on the first week of January. Wow. And so I would have suspected that all of those guys, because a lot of people listed last year and then they didn't sell. They ended up taking their properties off the market. They weren't happy with the pricing, et cetera, et cetera. So I would have at least expected that some of those guys would have waited until the spring market, but they might have a little bit of PTSD of like getting their house ready for market. It's emotional. So they might not want to get their house ready for market and set themselves up with the expectation it's going to sell for a certain price and then not necessarily get it. But again, we have hungrier, more poised buyers and less listings than what we're expecting. And so therefore it's a pretty decent recipe to see the market kind of trending the way that it is. But then on the flip side, which I thought was interesting, is condos actually have a little bit more inventory than what we've seen in previous years. And so in the condo market, we're going to talk about condo details in a second here. In the condo market, what I'm really noticing is, again, that entry-level price point, the like under 600K, tons of showings, tons of offers. But as soon as you get to that kind of like 800-900K mark, where people are able to say, okay, well, if I remove the maintenance fees and I have 20% down, I can go and I can afford that $1 million house. So now I have to make a decision about lifestyle and overall carrying costs. Well, at $850 with, $700 maintenance fees, I'm paying the exact same every month as what I'd be paying for $1 million house. Maybe I'll consider both. And so those things, I'm not seeing as much activity on those.
Very interesting. And you touched on a very good point, because myself, I am in that very position that you mentioned.
Mm-hmm.
I bought a property to flip when the market was like crazy and I was going to make a lot of money. Then of course the market changed. Oh, I'm going to hold for the property.
Yeah.
So a realtor called me yesterday and I was chatting with him. He said, Sandro, just for information, I'm going to send you some numbers here. 2 or 3 properties in the same neighborhood where you bought that property, they sold for more than we were expecting to list. Now is the time, but I don't have the PTSD.
Yeah, exactly. Well, and it's normal to feel that way, because honestly, and the thing is, like, you're an investor. You do this all the time, and you still feel that way.
Yes.
So can you imagine how someone feels when it's like their family home? They lived there for 20 years. Their kids were raised there. To them, it's the best property in the world, rightfully so, because it's their property, their memories, all those things. And then they put their house on the market and no one shows up to the door. And the only person who shows up to the door is the one buyer that was out, that was like, you know what? I'll only buy it if I get this discount. And they're like, this is all you think that my house is worth? Like, for us, it's worth way more than that, right? And now they're like, I don't want to go through that again because that was painful. And so I kind of I feel for those sellers that have that like emotional attachment and are having a hard time justifying going back to market, because I wouldn't want to feel like that again. That sucks.
Oh yes. And what amazes me is that of course the property is rented and is break even. So I bought to do a flip, didn't work out, is renting, that's fine. But then when I'm looking to again go down to the numbers and go to the the data, I am the one holding on your advice. Okay, if I can hold to it, I'm not going to sell right now.
Yeah,
I'm going to hold for as long as I can, because again, long term, the chances are I will make the money that I pretended to make either way, right?
Yes.
And that relying professionals like you, Emma, that really makes our lives much easier. Because again, there's a lot of professionals there, and I have all the respect for them, but very few individuals that they actually take the time to look into the numbers, dive deep into it. So now it's not about the numbers, but it's about the value that you're giving.
Totally.
And, when you talk about price, it's just a race to the bottom. But then you're talking about value.
Yeah.
Oh my goodness.
Yeah.
This is the type of value that people that need to make informed decision they need. And
And I think that people also, because I think it's easy for us as investors to always want to get the highest price, right? Like everybody wants there's three things that people want when they sell their house: the highest price, in the shortest amount of time, with the least amount of stress. That's pretty much like out of every seller I've ever talked to, those are like the three things. Like if I can get them those, they're like, I love you. I'll give you a 5-star review all day long. But one of the things that I think a lot of people and a lot of agents specifically, and I see this because I train them, they don't do enough. They don't get to know their clients enough to understand that, like, for some people, for me and you, the price, we're like, I'll hold on forever to get like that last dollar. But for some people, they're like, you know what? This is very stressful. This is very emotional. I cannot sleep at night. And I would be willing to take a little bit of a haircut or a little bit of a discount to rid myself of the stress and the burden, because this is not what I was not cut out for real estate, which is why I don't work in real estate. You know what I mean? So I think one of the most important things in selecting an agent to work with you is definitely having someone who knows the numbers, but also having someone who has the guts and the experience to build rapport with you, to understand what really is in your best interest so that they can advise you in the right way. Because for some people, truthfully, getting waiting 8 months to get the highest price when they could sell today for a $15,000 haircut, it's for them, they're like, it's not even worth 15 grand because it stresses me out every day. I don't want this on my plate. For me and you, we're like, nah, let it ride, whatever, it's all good. I'll wait 8 months for 15 grand. It sounds great to me, right? But that's not the case for everybody. So I think it's important that you find someone that has that kind of hybrid of like, I know what's going on and I know what it's going to take to get you the highest price. Are you willing to endure what it's going to take to get the highest price though? Because, and that's a choice that you make as the owner of the home, but I'm going to give you all of the variables of like, if you want this thing sold quickly, this is what we got to do if you don't want the stress of it. But if you don't care about it being sold quickly, that's okay too. But it's going to take you a little bit longer, and we have to set these kind of like touch points or benchmarks along the way to make sure that we're getting you results.
I love it. I love it.
Awesome. So let's talk a little bit about prices, because maybe this will be some information for you on like holding on maybe a little bit, depending on if you're right where you want to be or not. So if we look at, and I just want to, I guess before I do that, and just in terms of these graphs, I just need to give a quick shout out. Scott Ingram, I get I love this guy. So I would give him a follow on Twitter if you guys want some access to the data that I look at as well. You can come here because I will be looking at it and I will be assessing it if you don't want to assess it yourself. But he has some of the best graphs. And then also Alex, which is on Twitter as Zealand, follow him. Like, I just got to give them a shout out because they do such a tremendous job of pulling the data every month, and they make my job a lot easier in terms of assessing it as well. But if we're looking at sales to new listings ratio, and again, this comes into, this pairs along with months of inventory. But if we look at sales, so we look at the average sales, and you can kind of see this dotted green line here. This is the month of March going back to 2006. We're pretty well below the average number of sales that we expect within the month of March, okay? Now, if we look at the new listings, though, we are very well below the average. And so I wanted to give you kind of two graphs to look at it depending on how you learn as a viewer. So we can look at it this way, which you're like, it doesn't look, I mean, it looks kind of bad, but like not that bad. But then when we look at it and we look at the last 20 years and we put them in order, okay, we were the third lowest for number of sales, which isn't that bad, because if you look at any of the previous videos that I've done, we were like at the bottom in terms of number of sales for the last little while. So, as a real estate agent, you don't want to see that, because you're like, there's less houses to sell, there's less opportunities for me, so you better sharpen your skills. If you're an agent watching this, you got to sharpen your skills is my first thing I would tell you. But when we look at the flip side and we look at new listings, we were, in the last 20 years, the least number of new listings to come online in March in 20 years, right? And so look at 2022, 1 year ago, 20,000 new listings came online in March. Okay, we had 11,000. So we had half of them essentially, basically. But then when we take into consideration a number called sales to new listings, so how many sales happened in comparison to the new listings that hit the market, and we were 6th highest. So that means that there is buyer activity that is assuming this the new inventory that's coming to market. So you're like, oh, well, there's not a lot of sales and there's not a lot of stuff going on. Well, I'll tell you right now, if you're out in the marketplace, you do have some competition, because we wouldn't be the 6th highest. We were trending at like 30 to 35 to like 45% for the last couple of months, meaning that you had a lot more time. Things weren't selling nearly as quickly. You had more time to make a decision, not as many, buyers to compete with you.
Wow. And what amazes me when I look to these numbers, that even at the peak of the market,
yeah.
So when you're looking there to 2020, 2021, it's still not as much sales as we're having now.
So there's more sales, but there was way more listings. So you think about it, it was like, okay, well, there were way more listings. There were 20,000 listings, right? And then you look at, okay, so there was 20,000 listings and there was only 10,000 sales. Okay, well, 10,000 sales is a heck of a lot more sales than what we're at now. But you know what? When we have 6,800 sales and only 11,000 listings, that's technically a tighter market than even what we had in 2022. We were at 50% of them, right?
Yes.
So it's, again, all of these things that I'm saying are taken into consideration, where I almost feel like, and I honestly don't, I'll tell you guys, honestly, I hadn't even really thought about this before this conversation, but I almost feel like it's the interest rates right now that kind of have a cap on it. Like they've kind of put like a lid on the jar. Whereas if the interest rates weren't there right now, I'd be very curious to see what would happen with the marketplace. But we don't have a lot of inventory. We do have buyers coming back to market, but they are more poised. And I think they're poised as a result of the fact that rates are hindering, hindering their affordability, but also making them second guess or have a second thought about before making a decision.
And wow, I love that you touched this subject, because when I, again, look into all the aspects, and then I see what the Bank of Canada is doing, and then I see what the government is doing, and it's almost that they're not talking the same language, because here we have the government incentivizing immigration, increasing the targets for new immigrants, and also Bill 23 happening in Ontario to stimulate more units into the market. The Bank of Canada trying to hold. It's like, well, again, it's a supply demand, and the demand is definitely there.
Yeah,
so
for sure.
See, I agree with you. Take that, the lead out of the jar. What's going to happen?
Yeah, totally. And no, I us having that conversation, it really seems to be. I don't think there's any questioning whether the demand is there, and I've been saying this for months. It's like, the demand hasn't gone anywhere. The desire for someone to own a home in Canada, it's not like people are just like, oh, rates are high, I don't want to own a home anymore. It was like, rates are high, I just kind of don't want to own a home right now. And anymore versus right now are two very different words with two very different connotations. And what we're starting to see is like that pent-up demand come back in the marketplace. And I think the one thing that is still kind of pushing it back is pushing back that line. It's like, a Bronco before it comes out of the chute that has that little door there. The rates are kind of the door that are like holding it back a little bit, it seems like, right? So we'll talk a little bit about the condo market, and then we'll wrap it up with some rental stuff. So if we look at the condo market, it stayed relative. So we actually had a lot more condo sales this month. We had almost 50% more condo sales this month, which was great news, because last month we had less than 1,000. So the west end of Toronto, average price point stayed relatively the same. We're at $645 last month. We're at $650 this month. And so that takes into consideration everything in like this, the purple circle there. Okay. Then we look at Toronto Central, which is primarily comprised of these two areas, CO1 and CO8. That's like downtown Toronto. So that's where you're going to have the bulk of transactions, but you also have another very dense area up in North York. And so the average price point for Toronto is $786 right now. Okay. And then again, so prices have stayed the same. They were $787. So they haven't even moved $1,000. I moved like a couple $100, not a lot of movement there. But Toronto East, again, to my earlier point, we saw prices increase 5.9%. So we're at $569 and they've gone to $603. Why? Because there's a pretty big gap between $569 and $645 being the next closest. And so again, the buyers that are like, I've been waiting, maybe I'm missing my opportunity. I only have so much money to invest. I'm a first-time buyer. I'm entry-level price point. Those are always going to be the markets to kind of rebound first, okay? But I don't want to scare anyone. And so what I did was I actually pulled some data just to kind of show you guys some more specifics this month, because I really want to like boost the morale, because I feel like, you know, it's real estate can be tough, especially when you watch these things. You're like, I really don't know how to feel right now. So if you look, okay, there are 1,300 sales, we'll say kind of like downtown-ish, or in Toronto specifically. But if you look at average sales price across the board here, where I pulled this data from, we're looking at 729, so a little bit lower because we're not taking into consideration some more of the suburban stuff that was in the other slide. But if you look, 729 was the average price, but look at how many properties still transacted under. So this here will show you how many trades happened per $100,000 price point. Okay, well here, if I just said, oh, you're gonna have to buy something for 729, you're like, I don't have 729, like I can't buy a house for that. That's here. Okay, that's like here if I put my mouse to it. Look at how many units have sold from here, 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 and here. There's still a lot of opportunity. When I show you the average price and you're like, well, I guess I just can't buy a house because I can't afford the average house. It doesn't mean that you have to beat the average price point. Yeah. There's 111 properties that sold between $400 and $499. There's 332 properties between $500 and $600, and the actual biggest sector was between 6 and 7. So yes, the $2 million and the 1.7 to 2 will skew the numbers to be slightly higher because there's actually more of these than the 200 to 299. It's more like a parking spot these days. But you know, please don't just look at the average number and then just be like, I don't even want to think about this anymore. It's not for me.
And that's why it's so important to partner with you, because you show the way. You start with a smaller project. Maybe you have to drive a little longer, but then you do that for 2-3 years. Then you start making your way to where you want to be, but then you're already ahead of the game. Not waiting to get into the game. You always be feeling like you're missing the boat because things are slowing down.
Totally. So I wanted just to break it down for just the two downtown, because most people who are looking at buying a Toronto condo are looking at these two areas. So CO1, which is the west end of downtown. And so what I wanted to show is like the average price for CO1 is $778. But I did the math, and 44.6% of the condos that sold in March sold for less than $700. Not even less than $778, less than $700,000. Wow. Okay. Now, please note that the average list to sale price ratio was people are just paying what they're asking. So if you're like, well, how much should I pay? And you don't want to get a professional comparative analysis, you're probably going to pay around the asking price, because that's what 100.1% is what the average sales to list price ratio was. And then if you look at CO8, which is the east end of downtown, we had 50% of their inventory. So they had 174 trades, and 50% of them were under 700K. So if you're like, I don't have 700,000. Okay, well, if you have 550, you actually had you had the same number of units that sold from 5 to 6 as 7 to 8. Okay, so don't be too disheartened. There's definitely still inventory out there. And the last thing I wanted to just go through was just rental market changes. I track these every single month just for this one small sample size, but I wanted to just showcase this because this was actually interesting. We normally see prices increase pretty drastically for rental prices from January basically going into July. And so we started to see that at the beginning of the year. And this last month, things kind of tapered off, which is kind of unusual in the rental market. And I don't know if it's just as a result of we saw such crazy drastic rental price growth as a result of interest rates last year that maybe people are a little bit capped out. But I will pay attention to this going forward on kind of average rental and so the average house price is about $3,100. The average condo rental price is about $2,700 or $2,750. But just to kind of showcase, usually we see a little bit of turnover starting in the spring market because it's nicer and people want new stuff in the spring. It looks better, et cetera, et cetera. But we seem to have a little bit of a cap right now on rental prices, which we typically don't. So that is what I got for you guys today. If you are looking to get in contact with me, you can find me on Instagram at Pace of Base. Or if you want to have a conversation, just even a 10-minute call to see if and how my team can help you, there is a link in the description below to book a discovery call to see if there's any way that we can even help you.
It was a pleasure having you. And Emma, this was amazing information. And again, reach out to Emma if you want to get to the next level. Get into it. Learn how to do it. She's your girl.
Awesome. Thank you, Sandro. I appreciate having you as a host. You're a great host.